Good morning, ladies and gentlemen, and welcome to the QUIZ PLC Interim Results Investor Presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged, can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Just please simply type in your question and press send. The company may not be in a position to answer every question it receives during today's meeting. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your InvestorMeetCompany dashboard, and you will receive an email when they're ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll, and if you give that your kind attention, I'm sure the company will be very grateful. And I'd now like to hand over to Tarek Ramzan, CEO from QUIZ. Good morning, sir.
Good morning, everyone. Welcome to QUIZ Half 1 22 results. Strong revenue growth as social restrictions have been relaxed. Demand for dresswear has increased tremendously. We've also had business restructuring positive steps over the last 18 months. We've renegotiated the store leases and we're mainly on either low base or turnover rents. There's been significant cost control measures put into place successfully, and the inventory that built up over COVID is being managed successfully also. The business is now focused more on their own website and stores with less dependency on third parties. Some financial highlights. Group revenues increased 109% as social restrictions were removed and lockdowns end. Gross margin is moving back up, and it's moved up to 57.5%, and we have a return to Ebitda profitability. I'm very pleased to say 0.7 million in the period. Operating cash flows are also 3 million higher than the previous year.
Obviously, just to touch upon some of the profit and loss, Tarek referenced the strong revenue growth that we've had, and I'll come on and talk about that in a minute. I think the main point here is obviously we're glad that the revenue growth that we've had in the period has been matched by a much smaller increase in the costs. So we managed to grow revenue by 109%, by operating costs increased by 22%. So we've leveraged off the infrastructure of the business that obviously remained post-pandemic, and that's helped reduce the operating loss significantly in the period. I think obviously the thing that's pleasing for us internally as well is that we have generated positive Ebitda, and we've returned to generating positive cash in the period as well. So as you see there. Yep, on the revenue, just on the prior period, as we all know, was heavily impacted by the impact of the pandemic. In particular, the stores and concessions were closed for 3 months, as opposed to just under a month in the current period. Our online side, we've seen significant growth there too. With that growth concentrated around our own website, which now accounts for 70% of our sales. Internationally, it was the features there were very similar to the UK. That when we saw social restrictions being lifted, we saw demand for the product return. So, and what we've also seen in the period is a kind of steady improvement in footfall and like-for-like numbers compared to 2019. So by the end of the period, we were broadly back to where we were in 2019. As far as the mix of the business is concerned, it's effectively reverted back to where it was before, in terms of the online business being about 35 to 40% of our revenues, which is obviously a percentage we would hope to grow in forthcoming periods. Just a few points on the costs, in terms of where those changes in costs did occur. Employee costs actually went down in the period, but that's largely a reflection of the lower stores and concession numbers that we have, and therefore lower number of employees. We also took some actions last year with regards to reducing the number of employees at head office in response to the pandemic, which is reflected in those numbers as well. As far as property costs, that is a number that has increased, but the main difference there year on year is the fact that last year there was a significant period of time where we weren't paying rent because we terminated leases on the 10th of June and then renegotiated leases on a store-by-store basis. So that this year reflects a full 6 months of charges as well as a return to business rates, albeit in a limited basis in England. Marketing costs increased as demands increased, but Shaz will talk about that in a while. And as far as distribution costs, just the point there, that's obviously just a reflection of activity in the business. Firstly, in terms of commission that we pay to third parties for selling our product on our behalf, and obviously the traditional distribution costs of carriage costs going out to stores and concessions. One feature of that is actually the web delivery costs net of charges to customers is actually not really increased year on year, as we've been able to reduce using free delivery as a promotional tool in the current period. And the government support, as you all know, it's a mix of furlough payments and government grants given to retailers to support them. And that effectively, from our perspective, came in April and May. That cashed us, and we've made very little use of furlough after that period. With regards to the balance sheet, obviously reflects the loss of the period with net assets reducing to 15.2 million. But still, it's a pretty robust position from a day-to-day perspective. There was very limited activity in the capital expenditure, just as we made sure we preserved our cash coming into this period. We'd expect fixed asset additions probably to be close to 1 million for the full year as we start to spend in certain areas again with the cash coming into the business. Working capital, there was a large positive inflow from working capital as we reduced inventories coming into this period in terms of the overhang of stock that we had from previous lockdown periods we've managed to reduce in the current period. And obviously compared to March 21 level, a bigger level of activity in the business in terms of buying products, so therefore the payables balance has increased between these two periods. And just the last point for me with regards to the cash flows of the business, that's just really obviously a reflection of the points that I've referenced before. Firstly, obviously the positive profit contribution in terms of Ebitda being complemented by a strong working capital movement in the period. We've been pretty cautious with regards to what we do with the cash. And we've actually increased the net cash in the business from 1.5 million at the end of March to 4.2 million at the end of September. So we've seen from the statement this morning that actually that's increased again to about 4.6 million as of yesterday. So it continues to go in the correct direction. So that's it from myself for the moment, and I shall pass over to Shaz.
Thanks, Jerry. Just over on page 13. So as you're aware, we operate an omni-channel model encompassing both online and offline channels, and we've seen a considerable increase in demand and revenue in all channels since coming out of lockdown. In terms of the online side of the business, we've witnessed a 43% uplift in sales through the quiz site, and we've seen active customers increase around 30% to 420,000. We're also pleased to see quiz ranking very highly on various search terms online and on Google, etc., for key categories like dresses and some of our other key areas. So that again is a good sign about the bounce back in demand for the brand. As you know, we do trade with third parties online, which are responsible for around 30% of our online revenue. Next is one of our key online partners. However, we've also recently just launched the Very Group, and we're seeing some very good results and some good growth potential ahead with that particular partner. In terms of the offline estates, in relation to stores and concessions, you can see in the table there the change in the number of stores and concessions between the two periods. So we do have quite a considerably reduced footprint following the restructuring that was done last year. However, we believe we've got a much more flexible and leaner foundation now due to the turnover rents that we have in all our stores and sort of commission arrangements in the concessions. And we're generally operating on quite short, flexible leases. So we believe that puts the business in good stead going forward. In terms of the performance in those channels, we were pleased to see like-for-likes sort of normalise back to where they were in previous periods. And again, the store model is really focused on turnover rents, short flexible leases, and that puts us in a good stead going forward. As Jerry mentioned earlier, we're also pleased to see the revenue and demand bounce back quite strongly in international channels. So again, QUIZ brand is resonating well with customers in various territories. Just over the page, in terms of gross margin, we're generally quite happy with the margin performance. We've cleared through quite a lot of the residual stock from the previous periods, and we've seen the gross margin improve considerably to just under 58%, which is a good increase on from, I think it was under 52% previously. We don't have much overhang in terms of stock, and we're sort of comfortable with the current stock position. In terms of headwinds, there has been some pressure in terms of costs with freight issues, etc. But we've managed to absorb some of those challenges, and we've not really seen any significant impact from that area. We're building in some longer delivery times to address that going forward into next season. In terms of the cost base, as I've mentioned, we've managed to achieve quite considerable efficiencies through the business restructuring that was done last year. So we've seen some good reductions in property costs and head office costs as well as a result of that. Operating costs increase have been limited to about 22%. As I mentioned earlier, we have seen some pressures coming through. There is wage inflation on the horizon. We're conscious that there will be a reduction in business rates from week going forward, and there are some pressures in terms of freight and energy costs. However, as I mentioned, we've not really seen any significant impact from those issues so far. And as we move forward, we have sort of revised some of our pricing slightly to reflect some of that. We haven't made any significant increases in prices. We're still very much offering a value proposition to our customers. We think that's important, and there's not been any resistance to any of those price changes so far. So post-COVID, we believe we're operating in a new retail landscape. QUIZ has undergone a brand refresh, and we're now sort of coming back onto our front foot in terms of marketing as we've seen demand bounce back. So just to highlight a few key points there, that we do have a differentiated brand proposition. We do have a broad age appeal. We appeal to quite a wide range of customers, and we're very well known for occasion wear and dressy casual wear. As you mentioned, when spend was restricted while there were social restrictions, we did reduce our marketing budgets, and we took a more ROI-focused approach to more digital-orientated marketing. But now that we've seen things come back, we're now getting back on our front foot with marketing. We just launched our new Christmas campaign last month, and we've bolstered that with some other autumn-winter campaigns involving influencers and celebrities, etc. We've seen some very good reactions to that, and the brand seems to be resonating very well on social channels and our digital channels and offline channels as well. And so that's definitely looking very positive, and we're planning more campaigns as we move forward, and we're increasing our marketing budgets for the coming year. I'll just pass you back to Tanak.
And now just to speak about current trading and moving forward. Total sales have been up from 2020, up 108%. That's not quite comparable because UK stores and concessions were largely closed during that period. So we cannot really compare against that. But comparing against 2019, I'm pleased to say that current trading like-for-like revenues are in line with 2019. UK stores and concessions, again, they're broadly consistent with 2019, and online revenues from the QUIZ website over Black Friday were also similar to 2019. The year-on-year growth online has also been predominantly through the QUIZ website. Cash generation also remains positive, and the company is financially stable with no debt other than normal overdraft facilities. We never took on any debt during COVID. A few words about the retail environment. It is a changed landscape. since after COVID. There's less brands out there, so there's less competition. There's reduced property costs. Online is more important than ever. So omni-channel brands like QUIZ that can operate in different channels and that are fleet of foot will find many opportunities coming their way over the next period. We're already seeing that with demand from our international partners, from other third-party partners asking about doing business with QUIZ. We're confident that the customer proposition with our emphasis on dressy wear and dressy casual wear will continue to reap benefits. In the short term, there is a few considerations. Recent developments regarding the Omicron variant are a concern over the pre-Christmas trading period. So far, I've not seen any significant downturn, but as I say, it does remain a little bit of a concern. There is a potential for cancellation of Christmas and some other social events. Longer term, we are confident that the brand and the business model remains relevant and attractive to customers with our dressy focus and our USP. We are very focused on development of the QUIZ web sales, and we'll be ramping that up over the next period. We intend to open more stores where we can negotiate flexible terms and turnover rentals. We will also be looking to leverage off our existing infrastructure to limit cost increases as we move forward. And we're confident the business can return to profitability as long as social occasions are not disrupted. With our reduced cost base, less competition, less brands having survived COVID, with huge demand for a dressy product with occasions and holidays coming back strong next year, we're looking forward to strong trading and growth over the next few years. So thank you very much for attending, and we'll now be ready to answer any questions.
That's great. Tariq, Shiraz, Jerry, thank you very much indeed for updating investors this morning. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the team take a few moments to review those investor questions submitted already, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your InvestorMeetCompany dashboard. I'd also like to remind you that your feedback is important to the company, and immediately after this presentation's ended, we'll redirect you for the opportunity to provide your thoughts and expectations. Tariq, Shiraz, Jerry, obviously investors had the ability to pre-submit questions. We did receive a number ahead of today's event, so perhaps I could start off the Q&A with these. And I know you have touched generally on them, but perhaps if there's anything more specific you could add. We had the first question, two questions really around strategy. How will QUIZ return value to shareholders, and what is going to drive value generation and the share price?
Well, we've already touched on that to some extent. We intend to grow in all relevant channels. Stores, as we said, we intend to open new stores in new areas with low-cost deals and turnover rents. International, we're speaking to new partners and looking for new deals, and we intend to grow in new areas. We have discussions with one or two partners at the moment, and that's ongoing. Online, there's going to be a big emphasis online moving forward. We intend to grow our own website by expanding our product range, expanding number of options in main categories, and becoming omni-channel and ramping up the marketing. So really, it's growth in all the relevant channels, and the revenue. As far as the second question is concerned, how will QUIZ return value to shareholders? Well, it's really revenue growth and profit growth that should drive the share price, and we'll be working on growth plans moving forward. We're working on growth plans at the moment, and the last sort of 12 months was really just conserving the business, conserving cash, and getting through a really tough period. So now we've done that. Now we're going to be focusing on growth moving forward.
That's great. Thank you very much indeed. And I think you did touch there on another question we received about your plans for your online business, which I think you've just expanded on as well. If I may turn to the next question, are QUIZ looking at any exclusive partnerships to help their growth?
No, we're not looking at any exclusive partnerships. We do operate with a number of partners. I've mentioned a couple online, and we do operate with quite a number of partners internationally on franchise and wholesale models. And so that is part of the growth plan, is to work with partners, but we don't have any exclusive key partnerships in mind at the moment.
That's great. Thank you. Thank you very much indeed. Perhaps if I could ask you to open the Q&A tab on the right-hand corner of your screen. You'll see investors have submitted a number of questions today. Perhaps if I could ask you to read out the questions and give a response where it's appropriate to do so, that would be great.
So, hi there. Yeah, so the first two questions are related, and we've got Ben who's asked with regards to our plans for the Stockport store portfolio going forward, and Daniel's asked specifically just with regards to do we have a number of sites that we expect to open in the next 12 months. So Tarek, do you want to address that?
Yeah, as you touched upon, there is a new sort of retail landscape, and the stores that were maybe at really high rents pre-COVID would not be feasible now. But rents, fortunately, have dropped, and costs in general have dropped as far as stores are concerned. So we will be looking at a number of sites. We're working with CACI, a relevant partner that helps us to predict footfall, predict which type of stores we should be opening and which areas we should be opening in. So we're working with them. We will be moving forward very carefully as far as stores are concerned. As I said, it is a new retail landscape, and with property costs being down, stores that would not have been viable a couple of years ago may well be viable now. So we are looking to open new stores as long as we can negotiate the right flexible terms and either low base or turnover rents.
Can I just add to that in terms of stores, we are operating an omni-channel model, and we do offer omni-channel functionality in the stores, and that's currently an area that we're enhancing. So things that like ordering online in stores, and being able to order store stock and place orders in store through our website are features that we're enhancing at the moment. So we do see that stores are also a good way of bolstering digital sales through collecting customer data and email addresses, which then sort of dovetails back into your digital database. So there is an online benefit and a digital benefit to some of that store portfolio plan as well.
Yeah. So the next question is just from Michael, who is asking for some more information or color with regards to supply chain issues that we experienced in the period.
Yeah, there has been supply chain has been challenged. We always sourced about between 40 to 45% of our goods from overseas, and our main partners there were in China. At the moment, we haven't been able to even go out to China. China's we've been unable to travel since just pre-COVID. So we're still working with our Chinese partners, and we're bringing in as many goods as ever. It's all being done over Zoom, and samples being sent to us, etc. Costs have increased. Freight costs have increased tremendously. Air freight has more than doubled in cost, and sea containers now costing us about 4 or 5 times what they were. So we've mitigated that by beginning to source more of our production from places like India, etc. And then we've also we're not flying in as much as we used to. We're working a bit more ahead, and we're shipping by sea. So overall, we've managed to mitigate, we feel, reasonably well the pressures. We did have some shortage of stock in September, but by the end of September, the stock started moving through quite well. So moving forward, we're aware of the supply chain problems. and we're beginning to work more forward, as I said, and we're sourcing from other countries like India, Turkey, Morocco to mitigate the problems from China. So we don't see any significant pressure. We're reasonably confident that we'll be able to handle the issues moving forward. I wouldn't downplay that because they are quite major issues. But what we've always worked very closely with our partners, and we think we can mitigate most of the issues moving forward.
Yeah. And just the next question I had was from Daniel with regards to the impact of the lower lease charges and terms of how much that benefited us in the period. I think maybe touched upon the direct comparison between the periods is difficult, but I think in terms of the lease agreements that we did renegotiate, effectively our rent bill would half compared to what it was pre-pandemic. So that should save us in the region of £2 to £2.5 million a year. So if revenues as they are just now get back to 2019 levels, our overall rent bill will reduce by that. But as I say, it's probably about £1 million benefit in 6 months just gone by. So with regards to the next, Ben is asking how do we see the mix of business going forward with regards to our own website versus third-party websites. So
at the moment we mentioned third-party sites are about 30% of the online turnover. So we are seeing that. I mean, we're still growing with online partners, but the bulk of the focus is really on our own direct-to-consumer channels. So we really see that as being the biggest area as we move forward and continue to grow. So I think that third-party mix will, probably stay around about 30% level as we keep growing the Quiz Direct online business.
The next question, the update potential for the Omicron variant. We haven't seen any significant impact yet. Over the past week or so, we've had problems with the lockdown measures more in Southern Ireland. So we've seen a little bit of a drop in the dressy sales there, but overall, dressy sales seem to be holding up quite well. And on the positive side, our casual sales have picked up very much since the cold weather started, and we don't have too much. We don't have any more dressy coming in, although we've still got casual stock coming in. So far we haven't seen any significant impact, and we'll just have to wait to see how December turns out. Hopefully this COVID, the variant is not going to be too much of a problem as far as the news coming out of South Africa is concerned, but it's really just have to wait and see basically.
So next question says the pictures of the presentation are great and on trend. Who are your key influencers, brand ambassadors now, and have you dropped Towie cast? Brackets, I hope. Towie weren't bad. So yeah, I mean, great to get that feedback on the imagery. As I said, we've been through a bit of a brand refresh, and you can see our logo and our images, etc., all updated, and we've upgraded our sort of social channels to sort of show that the Quiz brand is evolving and we're new and fresh and we're not sitting still. So I think customers are also identifying with that comment and seeing our website imagery. Our product as well has moved on a lot, and we've got some fantastic offerings at the moment with the product range. So in terms of influencers, we decided this season to, instead of launching with one single celebrity from one of these reality shows, we decided to launch a collection with 4 different influencers, all with their own audiences. So that's worked very well for us. We've had 4 personalities all pushing the Quiz Christmas Party collection and all pushing out with their own social channels. So we've actually managed to amplify that range, I think, more than what we would have had it been one single celebrity. So I think the key thing is there that we don't just kind of want to keep repeating the same formula, we keep changing and pivoting and updating it, and we'll keep doing that for next season as well.
Yeah. The next question is just with regards to expenses and why do they look high in terms of compared to other companies in our industry. I think as inflation just at the moment of building back the revenues. I think our operating expenses in 6 months just gone by represented about 64% of the revenues that we generated. I think if one was to go back, if we should go back 3 years, say to take that as a reference point, our operating expenses would have been 51-52% of our overall revenues. So I think there is largely a reflection at the moment of the kind of fixed element of costs within the business, and I think we would hope and expect the expenses to reduce as revenues build up. I should say expenses to reduce as a proportion of revenues as revenues rebuild. But rest assured, we're constantly looking at the costs, so we should see how that progresses. There's a question about any potential for share buyback with regards to where the share price is at the moment. I think the short answer is no, it's not something the company is considering at the moment. Obviously, it's something that would be, as part of an option, but I think the priority for the business is rebuilding the cash balances within the business and re-establishing profitability, and then get back into growth mode. So I think we think that we can use the cash productively to achieve those things. And obviously, if a share buyback is appropriate at some point in the future, we would consider it. So. Next is about higher commodity prices impacting us. Yeah, certainly we've seen that with regards to energy prices, etc., coming through. In terms of that, freight costs, etc., if one was to classify that as a commodity. In terms of your kind of bog standard commodities with regards to energy, etc., yeah, we've certainly seen that in the business, but maybe as a proportion of our overall costs, it's not as significant as elsewhere. Next one's related to that. Are we hedging any of the costs? Well, for example, on energy, we did fix a fixed cost, 2-year fixed cost contract earlier in the year. I think so that is proven to be beneficial. I think costs have certainly increased since then. As far as other hedging is concerned, it's pretty limited, to be honest with you. Beyond forex, I think we need to be flexible with regards to the supply chain costs and reflecting that into pricing if we need to. So. And our last question for the moment, unless there's anything else comes in, is do we see an opportunity for QUIZ with regards to obviously the changes that have happened in the market and retailers that have fallen away in the last 18 months? So.
Yes, we do see a big opportunity for QUIZ, and as we said, it's a changed retail landscape. So at the end of the day, there's less brands out there, and the brands that have survived are in more demand than what they were before. We don't take that for granted. We've been working very hard on product. We haven't really spoken much about product, but product has always been key to QUIZ. And over the past sort of 12 months, we haven't been sitting still as far as that's concerned. We've taken on some new design people, we've taken on a new design consultant, and that's been reflected in our improved product offering moving forward. So we're working very hard on product, and we intend to keep improving the product month by month as we move forward. And that, with the emphasis on product and the gaps in the market, there's lots of empty stores out there, so if you can negotiate the right deals, stores that weren't profitable before should be profitable moving forward. There should be more demand. There's more demand from international partners. There's more demand from UK partners for the brands that are still relevant, and for brands that have got great product. So yes, we do see lots of opportunities moving forward for companies like QUIZ that are fleet of foot and can operate in an omni-channel world. Omni-channel, we feel, is very important as Shaz touched upon. Stores drive digital sales as well. So we intend to take advantage of all the opportunities that will be coming up over the next period.
There's just one additional question for the moment that's been submitted. That's with regards to who are the related parties in the annual report which are connected to the family, which is Tarek and Shiraz and others. So there are the head office and the distribution centre are actually owned by companies owned by which Tarek and Shiraz are partial shareholders in, and other family members are in. So the company rents them. So there was a process at the IPO where, as you would expect, they were independently valued with regards to rents and what was applicable to them. That was redone again at the time of the administration last year. There were new leases put in place, and you know, that's something the non-execs are actively participating as well when those charters are set. So that's just the arrangements that have been in place for some time. So I think that's the questions for the moment. So
that's great, Jerry, Tarek, and Shiraz, thank you very much indeed for updating investors. And I think you've answered every question that has come in from investors this morning. So thank you once again for those investors that have taken time to submit those questions today. I know investor feedback is important to you, and I will shortly redirect investors to provide you with their thoughts and expectations. But before doing so, I just wondered if I could just hand back to you one more time just for a final closing summary. Jerry, can you hear me there?
Sorry, can you hear?
Right, so I think we've touched more or less on all the things that we wanted to speak about, and I think we've emphasised the opportunities for QUIZ that there are moving forward. So just like to finish off by thanking everybody for attending, and just emphasise that we're looking forward to a strong next period for QUIZ. Thank you very much, everybody.
That's very kind. Thank you very much indeed, Tarek. Ladies and gentlemen, could I please ask you not to close this session, as we'll now automatically redirect you for the opportunity to provide feedback in order that the company can really better understand your views and expectations. This may take a few moments to complete, but I'm sure will be greatly valued by the company. Apologies once again for the audio interruption at the beginning of today's presentation, but I'd like to thank you all once again for attending. On behalf of the management team of QUIZ PLC, we'd like to thank you for attending today's presentation. That now concludes today's session. I wish you all a very good morning.